Welcome back to XRP Insider and to today's explainer. If you've been glancing at the crypto charts over the weekend, you might have thought things were just taking a bit of a breather. But listen, do not let that surface-level calm fool you. What looks like a quiet, sleepy weekend is actually a massive market standoff brewing just beneath the surface. We've got major assets battling intense resistance and others coiling up so tightly for their next major move. It's a critical moment, so let's dive right in and see exactly what's unfolding. So the first question we really have to ask ourselves when looking at the past 24 hours of price action is this. Is the market actually stalling out, or is it winding up like a giant spring? I mean, if you only look at the daily open and close, you'd probably think things are just moving completely sideways. But as we're going to see, this is actually the exact kind of price behavior that signals a fierce, exhausting battle between buyers and sellers at key critical levels. It's a massive tug of war, and you know what? One side is eventually going to have to let go. To truly understand the scale of this standoff, we just need to look at the total crypto market cap. It is remaining remarkably steady at just under $2.7 trillion. Think about that for a second. What does it actually tell us? Well, it's a super clear indicator that capital isn't fleeing the ecosystem. Investors aren't running for the exits, they're just sitting tight. The money is resting, it's preserving its positioning, and it's basically just waiting for a definitive signal on where the broader market wants to go next. All right, let's jump right into Section 1, the battle for 79K. Bitcoin came into Monday with some absolutely fierce momentum. I mean, it surged upward, pushing hard to test that $79,500 level for the second time in just over a week. But almost as soon as it got there, wham! Aggressive sellers stepped right in and completely shut it down. In just a 12-hour window, we saw this incredibly sharp, aggressive move higher, followed by an equally fast rejection, bringing Bitcoin right back down to hover in that $78,000 zone. Right now, that top level is acting like an absolute brick wall. And honestly, the timeline for the week brilliantly illustrates just how exhausted these buyers and sellers are getting. You can literally see the whiplash. Monday gave us that rapid rejection from 79.5K. By Tuesday, the pressure pushed the price sliding under 76K. Then midweek, we saw a massive volatility drop all the way down to just under 75K. Buyers finally stepped back in around Thursday and Friday, pushing for a rebound back to 78K. And then Sunday morning, one last desperate attempt at 79K, which was once again immediately rejected. It's literally a masterclass in market indecision. Now, what's genuinely fascinating is exactly why we're seeing all this whiplash, because it isn't just random crypto trading, right? It's heavily tied to macro events. We had the Federal Reserve meeting midweek, where interest rates were kept completely unchanged. We've had major geopolitical developments, including reports of a new Iran-US peace proposal, along with rolling diplomatic updates. Add in some continued skepticism from key political figures across the aisle, and you have entirely non-crypto events directly injecting crazy volatility into Bitcoin's micro-movements. The market is just incredibly sensitive to the global stage right now. But here is the kicker. Despite these repeated, incredibly violent rejections at the 79K wall, capital is leaning heavily into safety within the ecosystem. Bitcoin's dominance over the altcoins has actually climbed up to 58.5%, securing its standalone market cap at about $1.57 trillion. So even though Bitcoin simply cannot seem to break out right now, the wider market clearly still trusts it way more than the riskier assets. Which brings us to Section 2, the XRP coiled spring. This is such a fascinating contrast. On one side, you've got Bitcoin fighting this loud, volatile, very public war at a major resistance wall. On the exact other side, you have XRP. It's just quietly sitting at $1.40, showing this highly controlled sideways preparation. It hasn't made any dramatic moves recently. Instead, it's just drifting. But top analysts are looking at this exact sideways action and calling it a massive pressure cooker buildup phase. So, the absolutely crucial point to take away here is that consolidation doesn't mean inactivity. When a major asset like XRP goes quiet and just grinds sideways, it's often building kinetic energy. These perfectly calm periods are exactly where the most explosive market outcomes actually originate. Make no mistake, XRP is not just drifting aimlessly, it is aggressively preparing for a catalyst. And what happens when that spring finally uncoils? Well, depending on the direction of the broader market catalyst, bullish analysts are projecting some really significant upside. If the market turns green and momentum builds, this coiled spring setup could snap upwards super rapidly, targeting a move all the way to $1.82. However, we always have to look at both sides of the coin.
If the macroeconomic momentum turns bearish, maybe triggered by Bitcoin failing to hold its own crucial support levels, that exact same pent-up pressure in XRP could trigger a rapid slide in the exact opposite direction. If momentum completely fails, analysts warn we could absolutely see a drop right back down toward that $1 psychological support level.
Moving right along to Section 3, Altcoin Pockets of Action.
For the most part, the behavior across the broader altcoin space is remarkably steady and controlled right now. Most large-cap altcoins are slightly in the green, but they're really only showing very modest gains. Ethereum is holding strong support comfortably above that $2,300 level. BNB is showing some great stability near $620. And Dogecoin is experiencing super low volatility, just kind of sitting right around 11 cents. They are cementing key psychological support levels, but you can tell traders are clearly just waiting for a bigger signal from BTC or XRP before taking on any massive risks.
But even in a remarkably quiet altcoin market, we are still seeing isolated pockets of action. For instance, TRX is catching some short-term trader attention, with a really solid 3% gain pushing it up to 34 cents and showing way stronger momentum than most of its peers. Algo is also jumping significantly, posting some highly notable double-digit short-term gains. But on the flip side of that, assets like Bitcoin Cash and Hype have seen noticeable declines over the exact same period. It's a perfect reminder for us that downside risk is always present, even when the broader market feels incredibly calm.
Which leads us to Section 4, Waiting for the Catalyst.
The most important takeaway from all of this information today is crystal clear. The best setups happen while the market seems quiet. Look, it is incredibly easy to get totally distracted by the minor daily whiplash of Bitcoin jumping up $1,000 and then instantly dropping $1,000. But this sideways, choppy consolidation phase is exactly when you need to be prepared. You need to be looking for the underlying structural catalyst, whether that's major macro news or a definitive technical break that will actually define the next trend, rather than just nervously reacting to the daily noise. And that brings us to our final thought for this explainer. We are currently looking at a $2.7 trillion market that is leaning heavily onto massive, vastly different technical structures. So, which domino is going to fall first? Will Bitcoin finally smash through that $79,000 resistance wall and pull the entire market up with it? Or will XRP's coiled spring be the explosive breakout that steals the show? Whichever one makes its definitive move first is undoubtedly going to set the tone for all of digital finance in the days ahead. So, keep your eyes glued to those charts, and thanks so much.